Good to have you along with us once again for another Agriculture Today. Well, the grain markets are feeding off of several things this week, and the wheat market in particular, taking due note of that hard winter wheat tour that just wrapped up here in Kansas and adjacent states yesterday. We'll bring that into the discussion, of course, as we talk grain market trends with K State Research and Extension grain market economist Dan O'Brien. And Dan, as per that tour, if the numbers that were projected are realized, we're looking at a sizable crop in Kansas, and the markets took due note.
Yes. On the positive side, if we get a crop of that size and the quality is decent, it'll be a help to tight supply demand situations for the feed grains and for wheat. In fact, on the earlier this week when those report numbers came out, there was a crossover impact from the wheat market, hard red winter wheat market, over into the feed grain futures, corn, and of course both corn and sorghum were affected. Closed yesterday, of course. Well, it's interesting to me that as we rolled out of the May contract into the July contract, that the July contract did not change that much, down about 20 cents. But yeah, in the closing throes of that delivery period, we saw a lot of amazing price action on that May contract before it went off the board. So when you look at and you compare that, the July contract for corn at 664 and a half on yesterday's close, compare that to hard red wheat, again coming into the harvest period in our part of the world, at 625. So you have basically 664 and a half to 625, 40-cent differential. And that differential in most cases, especially out to the west in the feeding areas, gets exacerbated by the time that you add the basis back in, add the basis in on that. And so you, for instance, in the areas where it makes the most difference, where we'd be feeding, we're most likely to feed wheat as that crop would come in and be available for use. You've got prices in Garden City first and foremost for hard red winter wheat at 607 cash price, and cash corn at 724, a ratio of 84%. That's per bushel. If you scale that back down to a per pound basis, it's 10.5 cents a pound for wheat, 12 some for corn. So you're at an 87% ratio. So and very similar situations, not quite as dramatic in Colby, $6 wheat at 704 cash corn. Hutchinson, it's quite the hot area. A lot of times you don't pay attention to that, but for weeks now, that's been a strong grain market. And 625 hard red winter wheat, 713 for cash corn. And you have other more export oriented areas, not as much feedlot action. Again, Salina, Topeka, Hutchinson, all major grain terminal areas, strong exports. Where, yeah, we still have corn prices higher than wheat, but percentages aren't quite as high, in terms of the differential. So, how the markets responded were that with the idea that we'll have a good wheat crop, and I think judiciously, as you read the media reports, people out of Kansas wheat and elsewhere were saying, yes, this looks awfully good now, but we would be still vulnerable to hot, dry weather, the microwaving effect of wheat out in western Kansas, where we get 95 degree plus 20-mile-an-hour winds. That can do a lot to succulently growing wheat. So anyway, that risk is still out there with rainfall. We've got disease issues to watch. I'm sure our agronomic brethren have been, and KSU have been talking about all that. So point is that as we sit right now, if you assume normal weather and no malady hitting the crop, we'd have a good wheat crop. And frankly, in supply demand balances of these grains in the U.S. are looking awfully tight coming through the summer. it would be probably a welcome, well, it'd be a welcome thing for the sake of not having us have to shut down usage industries just because we had nothing to put through. So
Right.
that'd be my thought on it, Eric.
Picking up on corn for a moment and demand once again, just can't ignore what's happening with corn sales abroad. And again, the big stick there is China. More numbers are affirming that, Dan.
We're sitting at about 190 million bushels sold, pre-sold on the week ending May the 6th. Here, the week ending May the 13th, we're up to 351. So we gained about 150, 160 million bushels of pre-sales into that next marketing year. So I just and as we backtrack where those sales have gone, they're credited to China largely. So China's buying ahead for the next marketing year, and they bought on a price break, which would be what any shrewd buyer would do. Got a price break, they bought. Well, what a deal! That makes sense. And I would say that even with that action out there down the road, for the next marketing year starting September 1st, this week we had 88 million bushels of exports. We need 60 to meet the USDA's 61 per week to meet the USDA's projection. So, if we keep up a pace like that, then gracious, you'll end up and have to have the USDA adjust exports higher yet again in this marketing year, and it would tighten up that old crop balance sheet. What happens is I think by the time we get within 3, 4, 5 weeks of the end of the old crop marketing year, come August 31st, will they stay the course on what they have on the books, or will they just roll into the new? And if they do, it just strengthens the new crop contract for D's corn. So we'll see. In interesting times. I would say also, since we're talking feed grains a little bit, if you look at cash prices, we still have strong cash prices for both corn and grain sorghum. But right now that, for instance, in Colby, you've got cash corn at 704, cash sorghum at 679. Tremendous price, but it's not on top of corn like it was when we had such a strong pace of export demand. And you look at Salina, 674, corn 654. That's not that much of a differential in 18 cents, but that's an export oriented area. Garden City 724 versus 674. Again, it's in the areas where we're more usage, in-house or in area usage oriented, a little more of a spread in areas, Salina, Topeka, et cetera. You're still holding up all that, very well for grain sorghum. We're actually holding up for grain sorghum very well across the state. You just see differentials according to areas to the degree.
Yeah, robust times for the feed grains still, although there's been this pare back in prices to an extent in recent weeks.
And I should add one thing in southeast Kansas, you have grain sorghum at 724 and corn at 713. So again, that you're pulling into the southeast markets, and I guess I'm learning something this year that must be that there are elements of feed rations heading off into those areas that fit well for sorghum, and they've held sorghum up. That's more a domestic demand issue, it seems to me, than an international demand one.
On that soybean front, Dan, once more interest in what's happening with exports there, and moreover, what appears to be a very healthy South American crop contributing to the supply.
Well, that's right. I think that we've got the vote on what the market thinks about the supply demand balances in the world and in the US on what's coming. When you look at what's happened to prices in the last 2 weeks, we had gotten up to tremendous price of about 1660 for a dare. So it's been some time at about 1640 per bushel. That's not per hundredweight, that's per bushel. But then I have dropped off to 1533, and we said dropped off to 1533. Still tremendous prices and tight supply demand issues in the world, et cetera. I did again, so you wake up, you look at the ag news and talk of a Argentine pork strike or something going on, and just things to roil up the market at a timely time that you know, as labor and businesses that down in those some of those areas go back and forth in trying to uh, encourage and improve their positions. These prime times for movements are, I guess, when they decide to do it. So that's what's going on. And shipments at a pace of about 12.3 million bushels, need about 12.5 to reach USDA's projection. And of course, USDA's projection is 2.280, and that's a great pace for exports. We are sitting at about 166 million bushels off into that are purchased for that next marketing year going forward, again, beyond September 1st. And the USDA is projecting about 2.275 billion. So I think the thing is, one thing to consider is that we're going to end up this year with really, really, really tight ending stocks. Our beginning stocks next year are going to be rough, and they're going to be really tight. And although we're not paying much attention to it now, if you go on to our printed materials and onto U.S. Drought Monitor websites and check out what the weather conditions are, anything other than in these areas in the very central part of the U.S. and out where we're at in the central and southern plains, all these other areas are dry. They're not doing great. Rains can come, that can all change, but here we're sitting May 19th, 20th, 21st, and yeah, crops are generally in, et cetera. Got some rain, but man, it's pretty dry in those areas. It doesn't want. I think we'll just need to be watching this in coming weeks, heading on into now late May into June and July, and see how some of these dry areas that have emerged are holding up. And if they don't, it'll just make for volatility.
I was going to say, the reality of it is these are going to be jumpy markets as we look at the ever-changing expectations for those summer crops moving forward. That's what's ahead, by and large.
Yep. And when the markets move lower, as they have here recently, we get a bunch of buying activity. So apparently, we have unconvinced foreign buyers that prices are going to be going down. If they thought that, they wouldn't buy. But now, when we have price breaks, they're buying. So that says a lot about the world's attitude towards U.S. crops.
All right. Well, we keep up with it weekly, and in this time slot, as well as with your notes on the markets, which are posted each Friday on the agmanager.info website. So producers have a look at all of this in more detail right there. Dan, thanks for the input as always.
Thanks, Eric. Take care.
Our regular Friday guest, talking grain market trends, K-State Research and Extension grain market economist Dan O'Brien, and this is Agriculture Today.